Mortgage switches, that's what we're talking about today, and we're talking about them for two reasons. The first reason is mortgage switches are often misunderstood, so we're going to unpack what they are. And the second is OFSI made an announcement this week, and we'll talk about that because it is in regards to switches. And by unpacking a little bit of the announcement, we'll also unpack what switches are, and then you can figure out if this is a good thing for you. So let's get into it. So what we have here is, let's talk about OFSI. OFSI is the Office of the Superintendent of Financial Institutions. You can Google them, and they made an announcement this week to eliminate the stress test for uninsured mortgages, which is starting November 21st. And OFSI has confirmed that it will remove the requirement for lenders to apply the minimum qualifying rate. So what does this all mean? Like uninsured mortgages, minimum qualifying rate, what is this all? So let's talk about it. So, first of all, what is an uninsured mortgage? Because it mentions uninsured mortgage. An uninsured mortgage is a mortgage when you bought a property, you had more than 20% down. And so you did not have to insure your mortgage. You did not have to buy an insurance premium. If you had less than 20% down, then you would have had an insured mortgage because you would have had paid an insurance premium. So currently, insured mortgages are already included in this, but they did not include uninsured, and now they're including uninsured. So both uninsured and insured mortgages are now qualifying at the same rate. So let's talk about the MQR, or the minimum qualifying rate. What is that? So currently, when you qualify for a mortgage with an A lender, you qualify at the current rate that they're giving you plus 2%. So if the rate that they're going to give you, say, is 5%, then you have to qualify at 7%. 5 plus 2 equals 7%. So you can qualify for less, of course, if you have to qualify at 7% than at 5%. And so this is where the benefit is maybe if you're going to switch your mortgage to a new lender, you may not qualify at 7%, but you could qualify at 5%. So it gives you a little bit of an edge. And the reason OFSI is doing this is, for example, if you feel like you're not getting competitive rates or you just don't like the product you're in, you have an opportunity to move your mortgage elsewhere. And in moving it elsewhere, you qualify at 5% as the example instead of 7%. So minimum qualifying rate currently is adding 2% to your rate. So 5 plus 2 is 7% when we use 5% as an example. And so if you move it over, you qualify, say, at the 5% rate instead of the 7% rate. Now, what is a mortgage switch and how is it different from a refinance? A mortgage switch is switching the exact amount and the same amortization to the new lender. It's different from a refinance where you want to take some equity out of the property, maybe to pay for some bills or for some future renovations or whatever it is. Totally different. A switch is you are moving your current mortgage to a new lender and nothing changes. For example, if your current mortgage balance is $400,000 with a 20-year amortization, you are moving it to a new lender with a $400,000 balance and a 20-year amortization. A refinance is you can change everything. So you can add new money to your mortgage, you can change your amortization on it. And so it's quite different than what a switch is. So don't confuse a switch and a refinance. And the next question is, can you switch at any time that we have here? Now, yes, you can switch at any time, but it may not be beneficial for you to switch at any time. So if you do not switch, for example, at renewal, then you may have to pay a penalty. So the most common time that people do a mortgage switch is at renewal. Basically, their mortgage is coming up for renewal. They're maybe thinking about the lender that they're dealing with, the interest rates, etc. So they might want to move it. And so that's what a switch is. And if you, for example, don't do it at renewal time, you can pay penalties, which can cost you more, and then doesn't make sense for you to do that switch. Are you saving money making a switch? Now, the next one is really important because do you need to requalify for a switch? Yes, you do need to requalify for a switch. This is really important because you cannot just move your mortgage to a new lender and think that they're just going to accept your mortgage. You have to reapply. So your credit has to be good, your income has to be good. and then you can move that mortgage. So, for example, if your credit is not great, or maybe you've just done, a job change where you became just recently self-employed, or maybe you're in a contract that's not renewable. I mean, there could be endless suggestions, but just letting you know that you may not qualify to move your mortgage to a new lender. So think about that if you're making a switch. Think about that you're going to have to do the requalifying process over. It's just not that you can switch it over to a new lender. Now, another thing is, are fees involved in a switch? Yes, there are fees involved in a switch, but what most lenders do is they will absorb most of the majority of the fees. So for example, there are legal fees. So currently your mortgage is registered on your property with your current lender, and when you move it over, the new lender would have to be registered and the old lender would have to be deregistered. Now, often, those legal costs to switch it over, the new lender will pay for it because they want your business. They want your mortgage on the books, but they may not pay for things like discharge for fees or admin fees, and they certainly will not often pay for penalties with your previous lender. So they may add, say, $1,000 to a switch. They can do that. They can incorporate 1,000 or 1,500 into the switch to cover some of those fees that the new lender may not cover, such as I mentioned, discharge fees and admin fees. But often the new lender will pay for a lot of the legal costs to switch it over. So that's a great thing, especially if you really want to do a switch and it's beneficial to you. Now, just also be aware when you do a switch, analyze all the costs. Does it make sense to go to a new lender? You also want to maybe negotiate with your current lender when it comes up for renewal. And what you want to do this is, I mentioned earlier in a previous video about renewal, so check it out, is you want to start this process about 6 months before renewal. Don't leave it last minute. Start about 6 months before renewal. Start looking into it. And when it gets closer in time, of course, you want to make a decision depending on, where interest rates are going. Anyways, there's a little bit about switches. I hope it was very helpful to you guys. And until next time.